Hello and welcome to this latest Janes webinar on the impact of the COVID-19 pandemic on the defence sector. My name is Nick Brown and I'm one of the Research and Analysis Directors here at Janes. As usual, I just want to warn you that we are recording this webinar remotely, so apologies for any sound effects off mic or sound quality issues that you may pick up. Right now, over to Guy.
Hello and welcome to the Industry and Markets section of this Janes webinar on COVID-19. My name is Guy Anderson. I'm the Associate Director of A&D Industry and Markets. So looking at our first slide, we're going to go through some of the defence industrial announcements from Europe and North America from the last week. So looking at quite a number of corporate announcements. First of all, we have Northrop Grumman with its first quarter results. It spoke of little impact in the first quarter and a modest impact foreseen in the second quarter of the year. And of course, that was primarily from aeronautic systems commercial activity. And some clarity on the full year, at least initial clarity, 2020 sales forecast down 1%. Elsewhere in the United States, Boeing announced it is to cut 10% of its 160,000 strong workforce, and it is also looking to issue a $25 billion bond to support its business, one of a series of major companies in this sector that has been looking to shore up its financial position. Then General Dynamics, first quarter revenue down 6%. Defence growth was apparent in the first quarter, but that failed to offset Gulfstream business jet delivery delays. Similar picture over at Textron. First quarter revenue down 11%. Defence-related gains for Bell and Textron Systems. And then at Airbus, revenue down 15% in the first quarter, helicopter sales up, defence sales held steady, remained strong, but commercial aircraft sales, of course, because of the pandemic, fell 22%. And in terms of policy announcements, there was some perhaps positive news from the US Department of Defence. During the week to 30 April, more defence contractors reopened than closed, so more were coming back to work. Now, looking at what this means, so we saw a return to work apparent in the United States and elsewhere. This reflects contractual obligations and shift from crisis adaptation to ongoing management and acclimatization to what we could call the new normal. First quarter reports indicate a harsh impact on commercial operations, while long lead times of defence contracts did provide a buffer. So impact was proportional to the scale of commercial exposure. Defence sector impact likely to be deferred rather than avoided, of course. There are longer lead times in the sector. Crisis mitigation measures ongoing, so we've seen new deadlines, staff reductions, and non-essential expenditure cuts are continuing. Now from the corporate announcements, sticking with that for a moment, looking at mergers and acquisitions in the defence domains. So in the US, first of all, we heard that the Department of Defence has been working to strengthen foreign investment rules, the objective to overcome the challenge of shell companies and what the DoD have spoken of as nefarious acquisitions. Elsewhere in the world's biggest defence market, we saw Mercury Systems, Moog, CACI, Woodward. They were among the companies to announce mergers and acquisitions break. So this fits with the theme of reducing non-essential spending to husband resources. This came on the heels, of course, of Hexcel and Woodward, two major aerospace companies exposed to defence and commercial markets. They cancelled their merger in April on grounds of the COVID-19 pandemic. And India announced that authorities are looking to, quote, fend off unwanted investments in SMEs that are weakened at this time. So what can we take from this? So at Janes, we track mergers and acquisitions activity in the defence and security markets on a quarterly basis. And we see this, certainly from this chart, the tempo of M&A activity held firm in the first quarter of the year. Although you can see from the value of aggregate deal value, that did fall quite substantially in the first quarter. And that was because there were very, very few transformational deals, at least compared with the previous year. Now, we have seen activity plunge in April so far, so we expect second quarter activity to be very, very subdued. The trickle of deals that have come through are largely limited to the completion of previously announced transactions. And again, this fits with the theme of reducing non-essential spending, which has been near universal in this sector. So acquisitive growth has fallen off the agenda. But again, as we saw the examples from the United States and India, and quite recently from the European Union, there is a fear that asset values having reduced could lead to opportunistic purchases. So that could threaten security and supply chains. Now, looking over to Asia Pacific, we have got some guidance from a series of countries, certainly in Southeast Asia, on defence spending. So what they expect to do to at least 2020 budgets with in-year adjustments. So South Korea, they've already announced a cut of 905 million. That's 2% off their budget, the majority from procurement and research and development lines, and to a lesser extent from operations spending. But the modernisation objectives have been reaffirmed. Over in Thailand, even deeper cuts. The 2020 budget was subject to an in-year adjustment of 18 billion baht. So procurement was hit hard, of course. Land systems and future submarine purchases were in the firing line. Also of note, we saw Airbus pulling out of Thai Airways joint venture relating to maintenance, repair and overhaul. This is something of a theme in the wider world, pulling back from joint ventures in this sort of area. Again, fitting with the theme of husbanding resources. Japan, the Ministry of Defence confirmed the 2020 military procurement objectives, that they remain unchanged. Contracted projects are of course ongoing, but tellingly we've received no guidance on future spending projections, and the Ministry of Defence would not be drawn on this subject. And the Philippines, rather bullish statements, no plans to cut military modernisation funding in 2020. Then Indonesia, budget cut by 9 trillion, that's 7% off the 2020 budget. So areas of cuts unclear, but the need for foreign loans to support modernisation has been raised. Two of the national champions of the defence sector have reported programme delays, and that was largely due to disruption of supply of imported components and subsystems. So there has been supply chain disruption, and that's filtered into programme delays. So looking at what this means, so is Asia Pacific something of a defence spending bellwether? So we saw in-year cuts of between 2% and 8% announced. And of course, as during previous crises, discretionary budgets, procurement and research and development have been hit harder. So much like the aftermath of previous economic crises. We see the deferment of the uncontracted projects as highly plausible. For obvious reasons, contracted efforts could limp on. So we also see some existing trends potentially accelerated. So there's the issue of import substitution. Indonesia has been hit by the supply of imported subsystems and items. South Korea has previously mentioned this as well. Import substitution, as well as ensuring guaranteed supply as far as possible. It's also a way of shoring up employment during a difficult time, but this is not a new objective. Greater domestic involvement has been a theme across the region for quite some time, so the direction of travel is certainly not new. And likewise, the issue of loans to support purchases that was raised by Indonesia. Well, Indonesia is an existing user of foreign credit lines, so we are seeing in that sense the continuation of an existing trend.